It's a great honor to be presenting this to the clients of XTB Online Trading, and this is their disclaimer. It's presented for general information and marketing purposes only. VectorVest itself, that I'm the managing director of in the UK, is authorized and regulated by the FCA, and although I'm qualified to give financial advice, I'm not allowed to give financial advice unless I've sat down with somebody and done a very long and a very detailed fact find. So I'm allowed to talk about those shares that I'm interested in myself, but I have to make it very clear, ladies and gentlemen, that although those shares may be suitable for me, they may not be suitable for you. So that said, we can move on, and at VectorVest, folks, our objective is to show you how to be able to invest with confidence and outperform the market in a few minutes a day, with a few minutes work in the evening. And that's me. Unfortunately, the wrong side of 64. That photograph taken at the New York Stock Exchange 18 months ago, I suppose. I've been in markets since I started in October 1982, and I've been a full-time trader since April 1988, and over the last 10 years I've been in fact helping people to improve their performance, both at the institutional level and at the retail level with VectorVest in the UK and in South Africa. Along the way I've done seminars for pretty much every large bank in the world, and those seminars of how to actually become consistent, how to become a consistently winner in the stock market. I've done a lot of work on the forex market. I've done a lot of work on short-term swing trading. So that's my background, folks. So what we're going to look at this evening is the VectorVest system of analyzing shares. When is it safe to be in the market, and when it's not safe to be in the market? And I think we can cut to the chase and say at the moment it's certainly not safe to be in the stock market. However, we're coming up to probably a very interesting time. If you ever want to start a hedge fund for yourself, the trick is to get in at the right time. If you make your clients 30% and then you have a 10% pullback, nobody much worries, but if you lose the 10% at the outset, you're dead. So we're coming up to a window in the market where we can actually buy into some stocks with very little risk. That window is not here yet, but it will arrive sooner or later. And then what I'm going to try and do is to suggest, and I'm not allowed to give financial advice, but to suggest a robust trading strategy to actually profit from the sell-off in stocks due to this coronavirus that shows no sign of abating, as you've all heard the news. So I'm going to start with the VectorVest system of analyzing stocks. I'm going to do it as quickly as possible because it's definitions, but nevertheless it has to be done. And if you're in property, there are three magic words: location, location, location. Well, if you're in the stock market, there's also three magic words: earnings, inflation, and interest rates. And based on those, the founder of VectorVest, Bart Toledo, has put together a valuation algorithm that puts a value to every stock on the London stock market, the New York stock market, etc. every single day. And as a default, ladies and gentlemen, we want to buy into shares that are trading below their VectorVest valuation. And there's a lot of them around at the moment. No problem with finding them. A month ago, there was more problems finding them. So at VectorVest, we believe that every investor should know, what's a stock really worth? How safe is it? And when to buy, sell, or hold. And for this evening's presentation, folks, I'm in fact going to focus greatly on this. How safe is it? Because I believe, it is my philosophy over the next few months, that certain cash-laden stocks will do exceptionally well when the dust settles. And I have a list of them for you. There are companies around with many billions sitting in the bank. Berkshire Hathaway comes to mind. There are companies around that have a few days worth of cash sitting in the bank. Avis, the car hire people, have got 2 weeks of cash in the bank in the US. So what's the stock really worth? How safe is this balance sheet? And I assure you that those companies with cash at the end of this will in fact be able to buy companies for next to nothing. You saw what happened a few weeks ago, when Sirius in the north of England ran out of loot, and Anglo came in and bought them for nothing. And then, of course, some idea about timing. So at VectorVest, we do our best to put together the fundamental position of a stock with the technical position of a stock. So that's step number 1, great fundamentals. Step number 2 is the share rising or falling, and step number 3 is the overall market. Okay, and we're going to get to all of that in this short presentation. So we put 2 measures of value to every share. We put one, the value of the share today, and we also look at the long-term price appreciation potential, which we call relative value. And this measures the long-term price appreciation potential, 3 years long-term, 3 years. And we measure that in relation to what a corporate bond will pay in the same period. And if a share has a relative value of 1.3, which we rank as excellent, that means that that share should outperform a corporate bond by 30%. This drives the share price, an exceptionally important number. It is a projection of future earnings. Now, the second VectorVest metric is incredibly important tonight. It's called relative safety. It's an indicator of risk. It measures the consistency and the predictability of a financial performance. So, we buy all of the financial data for all of the companies in the UK, all of the companies in the US, Australia, Canada, Europe. The algorithm goes into the balance sheet, the income statement, the cash flow statement for you, looks at all of the numbers, looks at dividends, dividend safety, dividend growth, and spits out one number which is representative of the consistency and the predictability of the financial performance. Now, this is a real number. There is no projection, ladies and gentlemen. It's looking at the cold, hard numbers on a scale between 0 and 2. Above 1 is fair. Above 1.2 is good. Above 1.3, this is a company that's making money, and all the financial ratios are in fact getting better. And in this evening's talk, ladies and gentlemen, with the sell-off that we've had in financial markets and continue to have in financial markets, there is incredible scope for buying undervalued shares that have got outstanding balance sheets. So we don't have to take any risks to make a really, really good return this year. All we've got to do is to wait for the market to turn, and as I say to all the VectorVest regulars, doing nothing is much more difficult than it would seem. Okay, next number, and relative safety, folks, that's what it's made up. Earnings consistency, the size of the company, a little bit about volatility, how long the company's been around for, and dividend history, and then of course all the financial ratios. When I was trying to do this myself before VectorVest, I only looked at the debt to equity ratio, but nevertheless all of the financial ratios are looked at. And then the VectorVest puts a number to the trend, and for most stocks in the market at the moment, that number is down on a scale between 0 and 2. Below 1 the trend is down, above 1 the trend is up, and the further above 1 the faster that trend is moving. So it measures both the trend direction and the trend momentum. And then what Bartolito did, the founder of VectorVest, is he put together a master indicator called VST, and in one number we've combined value, safety and trend into a single comprehensive indicator, which in fact puts together fundamental analysis and technical analysis. In this evening's presentation, because of the state of the market and the sell-off that we've had, I'm going to focus on those shares with the highest relative safety. Those shares with solid bomb-proof balance sheets that can handle a couple of months or 3 months of poor sales and still hang in there. Those companies will have tremendous opportunities, in my humble opinion, down the track. We put a stop loss to every share in the market every single day, and most of the shares we'll be talking about are below their stop loss in this sell-off. And we put a buy, sell or hold to every share in the market every single day. This can be used as a level to get in, to get out, but very importantly, we put a number to the breadth of the market, and we define that number as the buy-sell ratio, the number of shares on a buy divided by the number of shares on a sell. And the buy-sell ratio, folks, is what we call at VectorVest a canary, because it in fact predicts the future exceptionally well, and it predicted the sell-off beautifully. It will also predict the next rally. So, and we haven't quite got there yet. So, in this presentation, I'm going to show you what I intend to do. It is not financial advice, it's just what I intend to do. Over the next few weeks, I intend to wait for this market to bottom out, and I'm going to seek out those companies with bomb-proof balance sheets. I have a list of some of them for you a little bit later. I think that in any move up, those shares are vastly oversold, and those shares in fact can produce our annual return relatively quickly, even if the next move up is a rally in a bear market, which I actually think it probably is. We'll get to that in a second. So, we believe in buying rising stocks in rising markets, and clearly shorting falling stocks in falling markets. So Dr. Toledo says being on the wrong side of the market is the worst thing that can happen to you as an investor. It doesn't have to happen to you, and this is when I got to VectorVest, I found that Bart Toledo's beliefs about markets were very similar to mine. And we both believe that in the stock market, 70% of the exercise is getting the direction of the general market correct. And if you're in sync with the sentiment of the general market, it's quite easy to make some money on stocks. And very few stocks have gone up in the last month. The general market falling like a stone. It's easy to ignore market direction, and all the dudes in the television will tell you to ignore market direction. And there is a slide of VectorVest USA. Now I'm going to get out of this for a second, and I'm going to go into the VectorVest program, get rid of all my stuff, and there's VectorVest itself, and there's VectorVest USA, folks. A bit easier to see than in the PowerPoint. Now, that's today. We're following in the US, we're following 8,000 odd shares, and there was 7,120 decline today, which is 86%, and there was only 8.3 of the total database that advanced. And if you actually examine those, most of those are exchange traded funds that went up because the market was falling. The Dow Jones is down 1,690 points, give or take. And as you can see, our buy-sell ratio, that's the number of buys in the database, and a lot of those are exchange-traded funds, and that's the number of sells. And these are catalogued here, and we can see that the buy-sell ratio is right down at 0.02. Now, I've been with VectorVest now for the guts of 10 years, and I haven't seen it down there ever before. These two words, if you're not a chartist, these two words in fact represent the trend situation on the market. Now it's down, down. The first word represents the short-term trend, which is down. The second word refers to the underlying trend, which is also down. And the call refers to the underlying trend confirmed by price action. So on VectorVest USA, all of the VectorVest metrics from short to long term are down. And as you can see, this little traffic light summarizes the situation. VectorVest does not advocate buying stocks at this time. That's been the case for a very long time. So, and now I'm going to go back into the PowerPoint presentation. So those of you that don't like charts, now I love charts, but those of you that don't like charts, folks, this is all in fact done for you. This is what you see on the front page of VectorVest. This is what you see on your smartphone. So by just casually looking at the market in a few seconds in the morning, you can see that short-term trend is down, the long-term trend is down, the call is down. Now, the minimum qualification for the bravest traders to get into this market would be that the short-term trend turns to up and this pointer moves into the green. And we would also like to see on the same day that the number of advances is twice that of the number of declines. That's the minimum qualification for actually getting back into this market. So at the moment we're sitting in the American market, we're watching these shares go down. We could certainly be short, but in terms of taking advantage of this sell-off, it's still far too early. Now, more conservative traders may want to wait for the underlying trend to turn up. And there is actually a timing system between the two for people who like to get in slightly after the primary wave turns up, but before the underlying trend turns up. And that's called the RT kicker, believe it or not. Isn't it a wonderful name? We have, I believe she's in the room tonight, the lady who runs our London user group, Susan Thornborough. She in fact specializes in getting into markets using that timing system that's in the middle between between the primary wave turning up and the underlying trend turning up. And then the final one for position traders is the call. When that call turns to green, and when this in fact turns to green, that will be a confirmed up. It's called a confirmed call because it's confirmed by price action. So we have in fact 6 market timing systems. Now if you are a very aggressive trader looking to get in close to the bottom, then clearly you would use the quickest market timing system. That will actually turn faster. A rowing boat will turn faster than the Queen Elizabeth. So at my weekly webcasts and training at VectorVest, we actually coach you into finding which market timing system suits your objectives best. Certainly short-term traders, people that I think that are aggressive traders with XTB will probably be interested in the short-term trading system, and I have a proprietary one that I teach at my webcast on a Monday afternoon. Remember, the minimum entry point would be that the primary wave turns up and that the number of advances on that day is twice that of the number of declines. We want the market, the primary wave or the short-term trend to turn up on reasonable breadth, ladies and gentlemen. So if I go back to my PowerPoint presentation now. This is the longest term market timing system on VectorVest. Those confirmed calls. And down below we have 2 proprietary indicators. I've explained one, the buy-sell ratio, and the green line is the buy-sell ratio. That's what Dr. DeLito refers to as the canary. The market timing indicator is a momentum indicator of the price of the VectorVest composite, and the VectorVest composite is a equally weighted index of all of the shares that we follow in the USA. And you can see that this gave a reasonable sell signal. The shorter term systems in fact clocked the top, But the really exciting thing is the divergence patterns that we see on this, which I'll explain in a seckie. That's just a blow up. So the market timing indicator, when it's above 1, we're in an uptrend. When it's below 1, we're in a downtrend, and that is the underlying trend. Now, when the MTI gets below 0.6, and we're at 0.3 at the moment, we're searching for a major bottom. When the MTI, and we can't see this, is above 1.6, we're searching for a top. So ladies and gentlemen, in that previous slide, in January, the MTI was above at around 1.6. When it's up around 1.6, you want to be very careful about adding and building new positions. So the overbought, oversold levels on the MTI, going back 20 years, below 0.6, good buying time. Above 1.6, not the time to be too aggressive. And the other chart, the green line, is the buy-sell ratio. And when the buy-sell ratio is less than 0.2, we're searching for a major bottom. And when it's above 4.25, we're searching for a market top. Now, at the moment, ladies and gentlemen, the buy-sell ratio is on its knees at 0.03. And the MTI is similarly on its knees at 0.3 something. So we are in a mega oversold situation. Those of you that have been in markets for a long time will know that markets can hang in there in an oversold situation for quite a while. So we need a price confirmation of the turn. As I said earlier, the minimum confirmation will be the short-term trend turning up and the advances being twice that of the declines. That's the minimum confirmation for aggressive traders. I assure you that when it starts to move, this fear will turn into greed in 30 minutes. Bear market rallies are incredibly aggressive moves, and this bear market rally, which will come, in my humble opinion, and it's not financial advice, but in my humble opinion, it'll come as sure as day follows night. The run-up in shares with outstanding balance sheets could easily make my target for 2020, and that's what I'm gunning for. That's my plan. As you can see, folks, there's the MTI, and this is this ghost move that happened in February. Market went up, and as you can see, those of you who are technicals will see that the market went up, but the MTI couldn't follow it. And that is called, by technicians, it's called bearish normal divergence. And then we got the sell signal, and away she went. I think something that's even stronger is the canary, because as this went up like so, this just couldn't do anything at all. It was showing this longer term divergence, but this market was crawling up and the buy-sell ratio just couldn't come to the party at all, and then all of a sudden it keeled off. We know exactly what's happened now. So we're right down in a mega oversold situation. There's no divergence on the MTI. The price is falling, the MTI is falling. We just have to wait. And as I said, doing nothing is much more difficult than it would seem. We do our best to give out advice, and our advice at the top here was, we talked about that bearish divergence, which suggests that the downside risk outweighs the upside potential. That was there. Market was rising, but the MTI just couldn't follow. The buy-sell ratio couldn't fall. And then on February the 21st, we advised the primary trend turned over. It was preceded by this huge divergence, and the advice was sell, sell, sell. And that advice comes out every evening. Very proud of that. And that's just exactly the same chart. Now, this is the SPX, folks, and this chart I had to send it to XTB for their compliance to have a look at it, and of course it's completely irrelevant these days. There is the XPX. This is the cash, and as you can see, it's come right back and it's taken out these lows. I think that it was quite obvious that it was going to do that, because all the liquidity is down here. Okay, so it's run no stops. These will be fail-safe, last resort stocks, and those people have all been vaporized this afternoon. Where's it going to go to? Who the hell knows? It's still falling. I would suspect that there's a high probability, folks. If we turn here, then that would be great, but it could easily come back to this very important Fibonacci level, which is 78%. It's a square root of 0.618. Whether you believe in Fib or whether you don't, I assure you that a lot of people do. You can argue as to whether it's sent down by God or whether in fact it's self-fulfilling, and that argument has been going on for such a long time, but and pragmatically, these levels are important, especially when that 786 in fact has a confluence with that last top. So I think there's a high probability that we can move down. What is that level? That level, let me see what it is. That level is 2154. I'm hoping that this 2350 can hold this market, folks. These people have gone. A really good bit of advice, if I can give you any advice, is that if you look at a chart, just say to yourself, where are the orders? And I assure you that the orders, professional orders to buy, will be crowded around old lows. That's where the liquidity is, because all the people running for cover will have been stopped out down there. So it's too early yet, but if VictorVest were to give me a primary wave up on reasonable breadth, in other words the advances were twice that of the declines, then I would be inclined to stick my little pinkies into the market. So that is certainly not financial advice, it's just what I'm going to do. Okay, just what I'm going to do. Now this sell-off has been hard and fast. And I believe, folks, that we should in fact assume that we're in a bear market. And what I'm going to assume is that we're in a bear market. Oh, David, please excuse me. That we're in a bear market until this market closes above 78% of the sell-off. So I would expect, when this is over, very difficult to know when this is over, folks, but I would expect to see a strong and rapid bear market rally soon. Our metrics are mega oversold. It could easily take a day or two or a week or two yet. I think that if you're holding stocks and you haven't paid your stop losses on the way down and you're still sweating in stocks, that my stomach tells me that you'll actually get a much better level to sell out of those into strength over the next week or two. But you need to sit and think about that on your own. And then this could be over. The market could in fact, I think for it to be over, we're going to need some form of positivity around the coronavirus. The market could react to this huge levels of stimulus that ourselves, the Americans, the Germans, etc. are putting into markets. But until I see this market break and close above that 78% level, then I am going to in fact assume that we're in a bear market here, and that the probability is a test of whatever this low is, and normally it will go down and take that low out. And that's what technicians would refer to as an ABCD move down, or an ABC in Elliott terminology. So I am assuming that we're in a bear market situation here, and that we've got a bear market rally on the way. I'm reasonably fully in cash. If I see this pushing up, then I'm going to try and I think do exceptionally well in this run up. I'm going to talk about the shares that I'm going to get involved in a second. So the situation on VictorVest UK is pretty much the same. The primary wave is down. the short-term trend on Vector S is known as the primary wave. The short-term trend, primary wave is down, underlying trend is down, and we've been in a confirmed down for a very long time. There's 48 companies on a buy, 1,770 on a sell, and the buy-sell ratio also a 0.03. So, which companies should we consider getting involved in? Well, let's look at the US first. And it is my view that once markets begin to reach a new normal, I'm not saying it's going to be the old normal, but a new normal, that anyone with a strong balance sheet will do exceptionally well. And at VectorVest, our data provider is a company called FactSet, which is the largest provider of financial data in the world. And I got onto them a couple of days ago, and I asked them for the top 6 companies with the most cash in the bank. Microsoft has got 134 billion. Google has got 100 billion. Apple has got 100 as well. Facebook have got a miserable 56 billion. That's all. Berkshire Hathaway got about the same. Amazon's got a paltry 46 billion. So those are companies, and I'm going to look at those companies now. On VectorVest, we can automatically look at the American market. If I go to viewers, and those are the companies I talked about. I want to go to the stock viewer now. There's the stock viewer, I hope. And I've sorted all of the shares in the market by our proprietary measurement, RS. And that brings those shares with the best track record of making money safely with an outstanding balance sheet to the top of the pile. And as you can see, Alphabet is right up there. And I'm going to look at those shares at the moment. There's Alphabet. We believe the relative safety is 1.45 on a scale between 0 and 2, an outstanding number. It's on a sell recommendation. It's below its stop loss. Remember, we're bottom feeding here. And we believe it's going to grow earnings at 16% next year. Home Depot is also good. Visa, I'm going to look at, also looks exceptionally good. Lululemon, I've done so well on Lulu over the years, also looking really good. Ansys looking exceptionally good as well. So in this presentation tonight, folks, I'm in my own trading, probably for the rest of the year, in both the UK and the USA, I'm going to focus on companies with outstanding balance sheets, because my reading of the situation is that those companies will be able to feast on cheap takeover targets to build their business for next to nothing. Certainly in the US, many chief executives that have spent all their money buying shares back will probably not be sleeping that well at the moment. So let's just have a look at some shares in the US market. Where's my, that's the UK, and let's see where I can find it. That's the UK. We'll look at those in a second. There's Facebook. Now I've loaded in this case a 6-year chart here, and I'll probably load, that's from Facebook started. It's hard to believe it's been running that long. Now in the UK we have got 3 gentlemen. I called them the 3 wise men just before Christmas. And we have user groups around the country, folks. A wonderful collection of traders and investors. And 2 marks, one from Oxford, one from Guildford, and a gentleman by the name of Bill from Scotland. And they put together a conservative method of investing called Earnings Per Share Kings, where they look and put together a share that's in the throes of a strong trend, and at the same time, over at least a 5-year window, earnings per share is rising strongly, and if you come to one of our user groups or one of our Q&A sessions, you'll see how well this is performing. Benjamin Graham, who's Warren Buffett's mentor, said that earnings per share growth is the engine that drives the share price. Now, this is the Facebook share. It's moved up the page. That's what it's done today. And Dr. Toledo, who started VectorVest, is a fundamental analyst. I'm a technical analyst because I was too thick to get my mind around the fundamentals. I'm a mechanical engineer to start with, and that is Facebook. I like that's a simple trend line, and we've also got the ability to put fib on here, and the market just loves these 78% retracements. There's the 78% retracement and that trend line coming in. I think, folks, that Facebook has got the ability to do huge acquisitions relatively soon, if and when this market turns. So I'm looking at Facebook. It's got high relative safety. It's got $56 billion worth of reserves. It will be able to handle it easily, and it's an online business, and I think that many companies will be upping their online presence in this. Certainly at VectorVest we've stopped all physical stuff, and we use a webcast company called GoToWebcast, which is Citrix Systems, and in the last 2 weeks they've sold more stuff than they've done in the last year for people working from home. So that could in fact help Facebook considerably. Far too early to do anything, but yours truly will be looking with a little bit of confirmation for a push up here. Now, I am, as I've said a second ago, I am assuming that we're in a bear market, and I'm looking for a push from 143 maybe up to about the $200 level, which is one hell of a push, and that would make my year if I had that in half a dozen stocks. I am assuming until it's proven against me that we're in a bear market. So this, I'm going to be very, very careful with this move up. And if I get some money, I'm going to get my stop loss to entry, maybe take a little bit of partial profits. If the market in fact shrugs off the virus and starts to move strongly up, well, I can get back in again. Not the end of the world. So just watch that. I think that looks good to me. Let's look at the second one. This is Google, or Alphabet. And here we can see earnings per share over 6 years moving up very strongly. We have some form of trend line here. It's back into this range, and I would certainly, first of all, be thinking of putting on my fib between here and here. It's broken that 78% retracement, but these people have got 100 billion, and they seem to be keen in making acquisitions in biotech, and I think they'll be able to pick up a great deal of medical, pharmaceutical and biotech, and Google has got a long coveted role in this because of the rich data that they've got at their disposal. Remember, if you've got a Gmail address, you are in fact the product. That's why they give it to you for free. So I'm looking at Google, and if I was less than 65, I assure you that sooner or later this is going to be a great time to start a little fund, because I think you can get into the fund at bargain basement levels now. There's Visa, a great company. As you can see, there's the old high. It's come back a little bit to that trend line, and as the S&P took out that low today, which I think it had to get to, if it hadn't taken out that July 2018 low, I'd have been very surprised, because that's where the liquidity is. As you can see, the low of the day is that 78% retracement, pretty much to the tick. So don't think of buying a falling knife, folks. Let's just wait for the market to show at least some sign that it's turning. in your minds, focus that this is most probably and probabilistically a bear market rally, and that even under the best circumstances we're going to come down and test these lows again after it rallies. But Google can quite easily, or Visa can quite easily, get up towards that $200 level again. So like the look of that. That's Microsoft. Now Microsoft, in terms of relative strength, the relative safety is outstanding, but in terms of relative strength, this pullback in Microsoft has in fact been much less than that of the market. It's pulled back 180 to 140. As you can see, there's a old high here that it's respecting, and this pullback much less than the 78% we're seeing everywhere else, and that is a 50% retracement. It certainly can gouge to the 618, take out these lows. Far too early to do anything. Nevertheless, that company has got 134 billion of loose change. Okay, it can handle a couple of months where people don't do anything. There's Apple. And Apple, of course, has pulled back a little bit as well. This last old high still intact, and that support turning into resistance, and then you can see that's in fact marked the low of today, and certainly there's the earnings per share growing strongly, doubled over this period, and I would be surprised if even if we do get a bear market rally, that this doesn't push up and do its best to get up towards that $300 level again, and that would certainly percentage wise make my year. So as you can see, I'm looking upon this as a strong opportunity, even though probabilistically we're still in a bear, we're moving into a bear market. This is Amazon. Amazon have moved strongly, are moving strongly into food and other sorts of bricks and mortar businesses, and again, if I draw a line here, and I can see this, look at that. So that's support here, and that low of that range is 61% of that. I did that earlier, folks. So if a market should turn, I think that Amazon is going to do exceptionally well here. Again, the relative strength of this is very strong indeed. It's pulled back much less than that of the market. In fact, in the work that I did a bit earlier that I haven't got time to present, Amazon showed exceptionally strong relative strength to the market. So my rationale, my strategy in both the UK and the USA is to focus on shares with incredibly strong balance sheets, and VectorVest does that for me automatically. To focus on shares, I picked out these because everybody knows Amazon, everybody knows Facebook, everybody knows Microsoft, but there are lots and lots to choose from. These companies give the highest amount of cash on their books, and this is Berkshire Hathaway. Earnings per share on Berkshire Hathaway not as high or as regular as I would like. Nevertheless, if we look at this over even a longer period of time, as you can see, we've got trend lines here, and he's got a huge amount of money to spend, and I've drawn that rather loosely, but as you can see, we're hanging in at that support level, and if I were to do a fib from here to here, from that low to that high, oh David, the internet is, with this real time, the internet and the there, and as you can see, that's 61% of that, and if you come to my workshops on Monday afternoons, we'll talk about all these confluences of support and resistance. Too early to do anything yet, folks, too early. Market is falling, and just let the falling knife, leave that to some other dude, okay? And we could certainly break this 618 and move to the 786, which would be a confluence of that last top. However, I think that sooner or later we're going to beat out a bottom. I'm assuming that that's going to be a bear market rally, but nevertheless that could be an exceptionally good trade and make my year. So those are some shares that I feel are worthy of your consideration. They are certainly not financial advice. They are what I will be doing and what I will be looking at, and the poor VectorVest people will have to listen to me talk them through it on Monday afternoons, where we talk about every trade, warts and all. Okay, and I have a trading partner, a big Danish fellow called Tom Hogarth, and we have this pact that we will always talk about what we do ourselves, warts and all. If they're good ones, great. If they're bad ones, big deal. Okay, but I like those. Now let's look at the UK. It's 10 to 8. I don't want to keep you any longer, but in the UK, the market is still awful. Okay, primary wave is down, underlying trend is down. We're in a confirmed down. The little pointer's in the green, and VectorVest says simply, don't buy any stocks at this time. 2 Fridays ago we had a show. There was a young man at the show. He says, should I buy Royal Dutch Shell Bs? And I said no. It was trading at £19. He thought it was a bargain. And as you know, this morning they were trading at 9. Last week he wanted to buy them at 12. I got a bit fed up with them, if he bought them, fair enough. But never try and catch a falling knife, folks. Just wait for the darn thing to turn. And I haven't got that little box of advanced declines up in the UK market. Easy enough to put it up. But we would want to see the market, the primary, the minimum qualification is that we get an up situation. We see a green in this box. This pointer will be in the green, and that the number of advances is twice that of the number of declines. In other words, we've got a short-term trend up on reasonable volume, or reasonable breadth, should I say. So that's the minimum qualification. Now, if I go to viewers, there are some shares, and those are the highest RS shares. Now, the highest RS shares will find shares that are making money with outstanding balance sheets. Companies that have got enough loot to actually get through this and to take advantage of it. I want to employ what the three wise men taught us regarding our earnings per share kings. This is Avon Rubber. And Avon Rubber, look at the earnings per share plot over the last 7 years, folks. Just rising smoothly. That's what you want. It's got an outstanding balance sheet. It ran strongly recently based on an order that they got for gas masks from the American military. It makes specialized rubber products down in the southwest. And as you can see, it moved up now. That we've got resistance, we've got support. This is last night's close, so this candle, in fact, has still got 3 days to go, Wednesday, Thursday and Friday. But with any luck, and if the market does stop, then I think that this will hold it, and I would be looking for a nice run up here. I'm saying it again, that I'm assuming until it's proven to the contrary that we're in a bear market rally. Those bear market rallies are hard and swift. They're wonderful places to be if you can get them right, because they tend to move really, really fast for 8 to 13 to 21 days. I would suspect it's going to be about a 13-day push up. It's going to be nice, especially those aggressive XTB traders that are used to getting in and getting out with precision. So Avon I like the look of. The next one, and Susan Thornborough, who runs our London user group, that's JD Sports, folks. Look at the earnings per share rising, and it's fallen out of bed. That little line, that's where I got out. The VectorVest stop loss kicked me out just about here. But again, we've got lows down here, liquidity, and I'd be surprised if it hasn't taken out those lows in this day today. I think that this can easily jump up here, and we would be getting into those at bargain basement levels. Last year I bought into them here at 475, and I got out somewhere there about 720. Give a bit back. What can you do? They all end badly, folks. If I'd sold there I assure you that the damn thing would have gone to 15. So just be thankful that you've made a little bit out of it. So that is an earnings per share king, although the price action a little bit raggedy, I know. This Games Workshop, I was very upset to have to get out of this one because I bought into it at £13 just here. And I think at the start of the Games Workshop moving up, the only people in the country who knew anything about it was Victor Vest people. Nobody had ever heard of it. I spoke about it at a conference in London and I was laughed at because I was buying into a company that made toy soldiers, and the rest of the presenters howled with laughter. But it's done really well for me. It pulled back. I had to stop out of the damn thing. But there's a trend line, there's an old top, and I reckon that's where it's going to come to. If I put on my old friend Fibonacci, and I know I use it a lot, but it's stood me in good stead. There's the 786 at around that old top, at around the trend line. I would okay, the data has just been updated, and that I would suspect that that's where it's going to come to before this is over, folks. So looking at that, there's Pover. Okay, come back to this level. Look at that earnings per share growth over the last 5 years, and I would suspect that it's going to take out these lows before this is over. So this is Diploma, and Diploma has been a great little earner for yours truly over the years, and as you can see, trend line in place. This is over 5 years, a very important support level. It's come back, resistance, support to there, and again, if I put my fib up from there to there, as you can see, there's the 78% level coming in. So I've got all three measures of support and resistance that I use. The VectorVest people that are listening are just yawning because they hear this from me so often, whether it's a 5-minute chart of the DAX or whether it's a weekly chart of a London share. If you can coordinate fib, long-term trend lines, and old-fashioned support and resistance where they come together, as Indiana Jones said in a movie some years ago, X marks the spot. I'm dating myself now, I know, but too early to do anything, folks. Nevertheless, a high RS stock, a great balance sheet, and I think a share that can do exceptionally well. Lion Trust Asset Management, we bought it at 780 last year on the 24th of October, and it was sold at 1240 just here. So that was a nice run up. It's fallen out of bed. There's the long-term trend line. There's old support becoming resistance. What do you think? We put on our old fib just for the sheer hell of it, and as you can see, it went up to there. And where's the 786? Just sitting right there in the Pellendy area. So I shall be looking at Lion Trust Asset Management. You need to be careful. It's a tad illiquid. So but look at this earnings per share, folks, looking really good. Howden Joinery, I had a position in this. I got stopped out of it. Earnings per share is good. The price action is a little ragged. Charlie Munger, Warren Buffett's partner, has got 3 boxes. He says yes, no, and too hard. So we'll put Howden into the too hard bucket just for a while. There's Marshalls. If you've ever walked up on the pavement, there's a good chance that Marshalls have in fact made the paving stones. There's a trend line, and it's pulling back here, showing very strong relative strength to the market in this pullback. Week is not over. That's a doji. Has it got this £5 calling it? Well, maybe not. Maybe there's enough liquidity under these lows. So again, outstanding little company. This is the LSE itself. Earnings per share rising. I would be surprised, folks, if it doesn't get to that £50 level. Very surprised. Watch it down around there. But we'll put that into the too hard bucket. GB Group, without a doubt, folks, without a doubt, this is a great company in my humble opinion. I had a position in it here. Again, I got stopped out of it, but it's got this confluence, the trend line, okay, not a great deal of support and resistance on the 786 coming in, but to find these companies, all we've got to do is to resort by RS or go to a proprietary Unisearch. Now, these companies did exceptionally well in 2000 in the UK in 2019, because in 2019 the high RS stocks produced a 44% return and the market produced a 14% return. So this is not just something that works in this environment, it works in all environments, but it is my view that in this particular market we want to err on shares with outstanding balance sheets, shares that can get through this unprecedented period and survive and take advantage of this unprecedented period. It is my view, I've said it half a dozen times, I'm going to say it again, it is my view that any rally is a bear market rally, and I will view it as a bear market rally until we cross above 78% of the last sell-off. I will be very careful, but I believe that in the stocks that I mentioned in the US and the stocks that I mentioned in the UK, which you can easily find on VectorVest, that there is probably a good annual return in those stocks, and I will be buying them, the American ones through XTB on a CFD, and the UK ones I tend to actually buy straight without leverage. So how can VectorVest help you to put this all together? Well, we can show you how to do this relatively easily, folks. There's also some shares, and if you're worried about how to put this all together, well, you can do it alone. That was me trying to work out the balance sheets. Lost. All the annual reports piled up in the corner of the office. So to break out, I put together a little course that'll show you how to do all of this, and we call it the Successful Investing Quick Start course. It includes how to analyze any stock in 30 seconds, to find undervalued stocks with outstanding balance sheets, to separate the good from the bad. Very important in this environment. How to get rid of the bad ones, folks. All about risk management, position sizing, how to manage your money well. The nitty-gritty of overall market timing. The detail of short-term market systems for CFD type traders, aggressive traders, and market timing systems for position traders. So in the first module, we'll show you how to in fact work out which shares are good, which shares are bad. In the second module, we'll show you how to get rid of the bad ones. Third module will show you when it's safe to get back into the market that suits your objectives and your in fact focus. How to find the very, very best stocks to suit your objectives, and then 5, how to put the whole darn thing together into a simple plan that you can put into practice in a few minutes a day. Now, in the US we sell that for $475, but we're new in the UK, so if you roll up your sleeves and work with me, all of that is a paltry £5.95. Okay. And if you're interested, vectorvest.co.uk/proven. Now, we're not just going to give you a whole pile of tapes and analysis. I will back this up with 4 coaching sessions, and my colleague Glenn will in fact back it up with another 4 coaching sessions. We've got user groups around the country, and some of our user groups are actually moving online during this impasse, but those are normally physical meetings. We have one in London that Susan, I think, is listening, runs. We've one in Guildford by a very experienced trader in Guildford. We've got one in Oxford, big one in Oxford, one in Taunton and Somerset, big one in Manchester, big one in Birmingham, a great group in Edinburgh, great group in Belfast, a great group in Dublin, hoping to start one in North Wales. And those people meet regularly, and it's an awesome environment. I've done this with lots of people. And this young man I've been working with, he says he's finally got a written plan after all these years. I still haven't seen it. I've never seen a trader yet that didn't have a resistance to putting down what they want to do on paper. So vectorvest.co.uk, proven. And if you don't think it's the best £5.95 you've ever spent, you can have it back with the greatest of pleasure. It comes with 2 months. Where that slide has gone to, it comes with 1 month of VectorVest UK and VectorVest USA thrown in to do all the heavy lifting for you, and that's worth £49 on its own. So you get the course, you get VectorVest UK, VectorVest USA for a month, you get all our webcasts and user groups for a month. We've got a free toll-free line to North America, and that's open from 12 o'clock midday to 12 o'clock at night, where we've got a team of people that will answer your questions. Even if you don't go ahead with this, folks, just sit and chill. If you are experienced, then maybe you can take some trades on the short side. If your objective is to buy shares to put money away in your ISA, for example, then sit and chill and wait for the market to bottom out. I suggest that you look for companies with outstanding balance sheets at this moment in time. That's all I've got to say. I've kept you maybe a little bit longer than I thought I would. I'm very excited. If I was a little bit younger, I would take advantage of this and start my own little fund, but I'm pushing 65 and I need to chill a bit. I've been working hard all my life, but it's a tremendous opportunity over the next few months to actually anchor a fund in some really great stocks at these particular levels. I think that the cash-laden high-tech stocks that I spoke about in the US will have a field day buying out companies that are short of cash, and they'll get them like Anglo got Sirius. They'll get them for pretty much nothing. The company that's run out of cash will have two alternatives. One, you take what we give you, or two, you go bankrupt. So and I think we can do very well in those stocks. I hope you enjoyed my insights. Just remember, this is what I'll be doing. It's not financial advice. VectorVest is a very conservative product, and I've been trading now for over 35 years. I've seen them come and go. There are old traders and there are bold traders, but there are no old bold traders. So although I'm conservative, I've been around for a very, very long time. If you come in our groups on a Monday afternoon, as I say, you'll see all the trades, warts and all. My objective is not to be right in every trade. My objective is to get a reasonable hit rate, 60-65%, and make maybe 3-4 times more when I'm right than I lose when I'm wrong. The downside of this system is I haven't been able to see any questions, so I can't answer any questions. But if you send those questions, folks, to XTB, they will forward those questions to me, I'm quite sure. If you would like a trial of VectorVest and to do our little course, the Successful Investing Quick Start course, it'll be a great pleasure to work with you to get you up to speed, to take advantage of what is going to be, over the next 3 to 4 months, a very special moment where you can actually buy outstanding stocks at knockdown prices. Thank you very much indeed. Bye bye.